Container Corporation of India declared their number. Mr. V Kalyana Rama, CMD at the company, is now with us. Sir, given the challenges in the global trade, the sort of slowdown you're seeing in the trade data and domestic economy, would you say a 5% revenue growth is not bad to start this fiscal, especially with SEIS income recognized in the quarter gone by?
Yeah, I agree with you. This is a little tough in the export-import. There is a little slowdown, but yeah, we could come out with some encouraging numbers. So it's more encouraging for us that yes, when things start looking up, we will be doing much better.
Oh. Sure.
SEIS related receivables in FY19 end was 1,044. Can you share some clarity on how will these be booked in Q2 onwards?
You see, SEIS income is recognized once the notification is issued for the current year. So in this year, financial year, the government has not yet notified. So SEIS income basically flows out of the import-export policy announces for the 5-year term, that is from 15 to 20. And every year government gives the notification. So this year, when the notification comes, then we will account for it. So because the notification has not come, we have not accounted in this Q1. So when you look at the figures of this Q1 corresponding with the previous year's Q1 without SEIS income, the PBT has increased by almost 16%. That's a good growth. Even though there is numbers wise, we are slightly less. In originating figures, we are minus 5% and in throughput 1% less. But our financials look bright. Without SEIS, we are 16% up in PBT, and in PAT, we are almost 10% up.
Okay. Now, it seems the tariff measures that you took earlier have also helped in realization growth on EXIM and domestic fronts at about 10%, with operational performance even better as reflected in the EBIT numbers. What's driving operational outperformance?
Excuse me, I could not hear you properly. What is the last one?
Just what's leading to the outperformance that you're seeing, given that you've seen 10% realization growth on both EXIM as well as domestic fronts?
You see, as you rightly said, we made some changes in the last year. So those revenue changes, even though they are not affecting in the overall costing, but that has improved our financials. So now the volume growth, if it comes, then it improves much better. Otherwise, yes, that will be a challenge in this financial year to continue the growth.
Right. There were also reports saying that discounts and incentives were extended to stimulate demand amid the weak underlying economic indicators. How much are volume numbers trailing your budgeted expectations?
Volume numbers, as I shared with you, it's around 1% in the handling figures what we have done over the last year. So that puts us something like around 10% less than what we expect. We expect a growth of around 10 to 12% every year. This year also we expected. So we can say that around 10%, but Q1 is not the right quarter to come to the conclusion. So Q2, Q3, Q4, we expect the things to look up after the budget, now budget figures settled in and budget expectations of the market and all. So let's see in Q2, Q3.
So what is the outlook then on volume growth if the economy, say, assumingly grows around 6.5%? Would you be able to project right now?
Yeah, if economy goes at 6.5 to 7%, then we will be able to achieve what we targeted.
Guidance
That's
number
around 10 to 12% growth, what I shared with at the beginning of the financial year.
And that guidance continues to remain the same, 10 to 12%?
Yeah, that's what the guidance is 10 to 12%. Now I am also keeping my fingers crossed when the economy is going to turn up, and then that growth starts. Because now, as of now, the exports are subdued, imports are also little subdued. The economy is still to look up. So overall, there is a little strain on the overall economy.
Okay, so still a little bit of pressure building on the economy as well. Any scope of an uptick in tariffs? Fuel costs have also been going up post the budget. Are you anticipating anything there?
You see, as far as Concur is concerned, we have come out with a policy of price stability for the full financial year. So we will be going by that. So we will not change any of our prices till March 31st, 2020. This we have given, and then maybe the first time in the history of any logistics company we have given in writing. We assured all our customers so that they can plan their entire logistics for the year. So we are going by that. Yes, because of the various other factors, if the prices increase, we will be doing those changes only in the next financial year. That's after closing of this financial year.
All right. For FY20, the outlook as well on EBITDA margin, profit growth, any numbers you can share with us, Mr. Rama?
Now we maintain this as of now, because it's only Q1. I am maintaining my growth forecast given at 10 to 12% growth in both volume numbers and the profitability numbers. So that we'll maintain at this stage, and if any changes, then we will definitely share with you in future.
Mr. Rama, thanks so much for joining us this morning. Great to
So
get
one
your
more thing I will
Sure. Go ahead.
Yeah. See, the DFC is going to come this year. That's what everybody is expecting. That is going to actually give a good boost to the rail-based logistics. So we are also keenly awaiting that starting of the DFC. So things are not that dark, things are bright. That's what I want to share with you.
To hear that, we don't really get that commentary from many managements nowadays that things are looking up and bright. Good to speak with you as always.